Hi everyone, welcome to another session of Revise as Pro conducted by Uplift Pro, and it's basically crafted to help the CMA aspirants towards their revision phase. And myself is Amitabo, and I am the lead faculty for US CMA and US CPA from Uplift. So today, as part of our Revise as Pro, we will be covering a certain portion from Section A, Part 2 of our US CMA syllabus, namely the financial statement analysis. And the weightage around this particular section is 20%. So naturally is very important from the examination point of view. Now, financial statement analysis for the US CMA syllabus covers various aspects involving the financial ratios, then profitability analysis, certain special issues, as well as comparative financial statement analysis. Today, in this particular revision session, we are going to discuss about comparative financial statement analysis. So let's get started, everyone, and let's see what is expected for the examination, the questions that may come from here. Firstly, as the US CMA is structured, we may have MCQs and the essay questions. So specifically, if we think about the comparative financial statement analysis, it is of two types, the vertical and the horizontal analysis. So naturally from MCQs, there might be calculations which may be asked for, and the interpretations from those calculations which may come from both these two types of analysis. What this two type analysis actually includes the concept, some examples that we'll go through in further details. Secondly, in terms of the essay questions, if we see that it might have multiple sub questions around the financial statement analysis, or they may actually ask us to do certain comparison based on the analysis and then respond to the reasons for the change or the trends which are identified as part of those analysis. So now let's deep dive in knowing what is important to study for the comparative financial statement analysis. So basically, the key points to remember, the first point, very important, the comparative financial statement analysis can be of two types. The common size financial statement analysis called the vertical analysis, and there is also horizontal financial statement analysis which is called the trend analysis. Now, why do we need to keep memory around these two types of analysis? Because some MCQs may come which may test around our knowledge about the names by which this analysis is actually known. So just be somewhere aware of these two names, what is highlighted in bold out here. Next comes the point that when you think about financial statement analysis, we should first understand what a financial statement is. Now, this is very common, which is known to most of us, but still let's revise to keep in an idea about what it includes. So when we talk about financial statements, they can be general purpose or the special purpose financial statements. And here we are discussing about the general purpose financial statements, which can be US GAAP based or IFRS based. And since the US CMA is a US based examination, so let us focus on the US GAAP. And the US GAAP financial statements generally includes the balance sheet, the income statement of changes in equity, cash flow statement, and notes to accounts. But for our financial statement analysis purposes, generally questions will revolve around from the balance sheet or the income statement. But it's good to have a fair idea about what each of these statements is meant for, because some MCQs may come around it. So balance sheet, as we know, it is a as on date statement. It helps us to know about the financial position of the entity as on that date. Income statement, it helps us to know about the periodic performance of the entity for the specified period it covers. Statement of changes in equity again shows what has the change that has happened in terms of the shareholders' equity over a period of time, which may include my common share, the additional paid in capital, the treasury stock, and the retained earnings. Cash flow statement, it will basically shows the sources and application of cash over a period of time. So there can be questions for analysis for each of these statements, but generally we might get questions from balance sheet or income statement. Now the next question comes is that why do we need to have a financial statement analysis? And that comes from the perspective of who are the users of the financial statements. And generally we classify the users as external users and the internal users. For the external users, they need information around the financial statement to take more informed decisions, and they may include the investors, the creditors, the debtors, and the regulatory authorities. The internal users, on the other hand, like the management or the employees, they are more concerned around what has been the performance of the entity for the period, whether the objectives for which the different perspectives were set, they are being achieved or not. So it's more around again decision making, but for the internal users. Now, once we have understood these basic points, which are actually known to us, but still we are revising here because there might be some questions around these in our examination, and often it sometimes becomes that simple questions become difficult under time pressure. So just be aware of the different purposes for which financial statements are prepared, and you can somewhere answer those questions confidently in the exam. Now, moving ahead to know about what is actually meant by vertical analysis and horizontal analysis, and we will also see certain examples which will revolve around calculation and analysis. Okay, so let's the next part, the common size financial statement analysis or vertical analysis. What are the key points that we need to remember here? The first important thing, as it says, that it allows the users to compare financial statement from different time periods to analyze the trends and review the organization's future growth prospects. So naturally, year to year comparison is possible, and we are trying to find out the recent trends, changes, etc. But the most important point is the second point we should keep in mind for a vertical analysis. In vertical analysis, each financial statement line item is expressed as a percentage to a base amount in that FS. What does it mean? If you are referring to the income statement, an income statement may have different line items, right? In each of these line items, what we are trying to do, we are trying to express that in relation to a particular base amount, and that particular base amount for our income statement can be the total sales. Similarly, for a balance sheet, we might use the base amount as the total assets. Why we are trying to do so? Because it is a vertical analysis. So each of the financial statement line item in an income statement or a balance sheet is being expressed against a base amount in that financial statement. That you should keep in mind. So the analysis is happening in that statement in comparison to a base amount, right? Then the base amount is set at 100%. All other items are expressed as a percentage to the base amount set. And the formula, it is quite understandable, but still just to revise, amount of the financial statement line item divided by the base amount will give us that particular percentage. Fine. And what is the base amount for an income statement is generally the total sales, for a balance sheet is the total assets, and for the statement of changes in equity, it is again normally taken as the total assets. Now, the vertical analysis helps us in doing both the intra-period as well as inter-period analysis. When we are doing intra-period, it is like we are doing the comparison for the same company for the two periods might be. And when it is an inter-period analysis, we are comparing between different companies. And here one point to be kept in mind is that the two companies might be having different sizes, right? But vertical analysis helps to eliminate that size differences, and it helps still to do the analysis, and also comparison with industry averages is possible in an inter-period vertical analysis. So as it states that for an intra-period, where comparison is made of same company for multiple periods, and inter-period, it is comparison between companies eliminating the size differences, and also comparison with industry average will happen. So be mindful about the difference between intra and inter, because that might be tested in your essay type of question. Now we'll refer to an example, and for that we will use an Excel to see how the vertical analysis is performed. So just give me that a little time to share the Excel, and we can again move ahead. Yep, I'll just share the Excel. Right, here comes the Excel for all of us. Right, so if you see the Excel, there are two examples I have taken, the example 1 and example 2 for vertical analysis. Now if we refer to the example 1, it is an income statement, right? And we have data for 2 years, year 2 and year 1. Remember, in vertical analysis, what we are doing, we are trying to analyze each of the financial statement line item in that statement in relation to a base amount. So if you see, if I somewhere show you 20,000 for year 2 is my net sale, which is taken as a base amount, and that is why the percentage is 100%. Now against this net sales, each of the other items, if you see the formula, it is basically somewhere being expressed against my net sales, right? So each of the financial statement line item is being expressed against my net sales for year 2. Similarly, for year 1, we are also doing the same thing. We have taken net sales as the base amount, and we are computing each of our other financial statement line items against my net sales, and the percentages have been computed accordingly. Now then, what is the benefit of this? So for year 2, we have obtained the FSLI's percentage expressed to the net sales. Similarly for year 1, then we can compare between these 2 years to see what has been the trend. That is basically the intra-company vertical analysis, because here for the same company, we are doing the analysis for 2 periods, but here the focus is on the same statement, as we are expressing the financial statement line items against the net sales as the base amount. Now coming to example 2, which is basically a intercompany vertical analysis. Why? Because company A, if you see, is in thousands and company B in millions. So naturally company B is much bigger in size that of company A. But as we have said, that vertical analysis helps in removing the aspect of size differences. So naturally here again, for the company A, the net sales is taken as 100%, the base amount, and all other FSLIs are expressed as a percentage to that of the net sales. Similarly, for company B, we have taken the net sales at 100% for 45,000, and against that, all other FSLIs are expressed as a percentage, right? That is the calculation part. Now, if you analyze, you will see a very interesting perspective. The gross profit percentage for company B is showing higher than that of company A. But if you go deeper and if you see the net income perspective, it is seen that company B is having a lower percentage compared to that of company A. So this is the beauty of the vertical analysis, that though the two companies are in different sizes, but the analysis is eliminating the size difference, and it is trying to compare between the two companies to see what has been the trend, what has been the somewhere changes in comparison to the net sales of which is taken as a base amount that has happened. So as a part of our examination, we may be asked to compute the intra or inter analysis, and that might be for an income statement or for a balance sheet. And then on the basis of the trends or the changes, we may be asked to respond to the questions. So be mindful about the calculation as well as the interpretation part. Now, once we've understood this, let us go back to the PPT, where we will now discuss about the horizontal analysis. Again, just give me quickly some time to stopping sharing my Excel, and I'll quickly share the PPT again. Right. So going back to the PPT, right. So this is where we are talking about, or we're talking about vertical analysis. But now let's move into the aspect of the horizontal financial statement analysis, which is also called trend analysis. So what it is basically showing, let us see the key points to remember. Now, the horizontal analysis, it allows the users to evaluate the financial statement over a period of time, determining the increase or decrease from one period to another. Fine. The base period is determined to perform the analysis, which can be prior year or further back. Now see, just notice the change from the vertical analysis. In vertical analysis, we are focusing on the same statement. We are taking a particular amount as the base amount. Against that, percentages were calculated for the change. But here in horizontal analysis, what we are doing, we are taking a particular year as the base year. And against that base year, we are computing the change that has happened in terms of the amount or in terms of the percentage increase or decrease. So it is the year, which may be the prior year or a year back further, which is taken as the base. The increase or decrease can be expressed as a percentage or as an amount. The formula for calculating it, three methods. Amount of change method, which shows the current period minus the base period, the amount that will be the amount of change. This is the current period amount minus the base period amount is my amount of change. Percentage change method, how it works, current period minus the base period divided by the base period is a growth rate, and mind it, is the current period amount minus the base period amount divided by the base period amount will give us the growth rate. In case of percentage of prior period method, is the current period divided by the prior period is the percentage increase or decrease. Again, for a horizontal or a trend analysis, there is both intra period as well as inter period. For intra period, what is happening, trend of one FSLI from one period to the other, how they have performed for the same company we are doing. And in case of an inter period, we are taking into consideration between companies and with industry averages, right? So what we are doing, we might have different companies for which we are calculating the change that has happened, or there may be industry averages. against which a company's performance is compared to. So let us now go through again an example from the Excel to see how the horizontal analysis actually works, to be clear from the aspect of vertical analysis and we do not have any confusion. So again, I'm stop sharing my PPT and I'm quickly moving to share my Excel. Right. Back to the Excel and we go to the horizontal analysis tab. And here I have taken the example of a balance sheet of a company. And if you see, the balance sheet have 2 years figures, year 2 and year 1. And I have taken the year 1 as a base year as I have noted it down. And it is an intra-company horizontal analysis because we are doing it for the same company. And how we are doing, we have computed the amount of change of year 2 from year 1. We have applied the formula to see the differences. And then we have also calculated the percentage change. That is the current period minus the base period divided by the base period. That is my percentage. And this is the calculation part. And if you see, after doing the calculation, the change that has happened, which might be positive or negative, you may be asked a question that what is the reason for this change has happened, and there may be other information which may be provided to you, and based on that you have to answer the essay type of questions, because this question, if it goes beyond calculation, that is interpretation and concluding, I think that would be forming a part of your essay questions, because in MCQ it will only revolve around the calculation part. So again, summing up, for a vertical analysis, we are focusing on the same financial statement. A particular FSLI is taken as a base amount. Against that, the other FSLIs are expressed. In case of a horizontal analysis, what we are doing, we are taking 2 years or more than that of a particular year is taken as a base year. Mind it, the year is taken as a base year. Against that particular year, we are computing the change in amount as well as the percentage change, and then we are trying to figure out the reason for the change and the trends of the change that has happened, right? So that actually speaks about horizontal analysis. And let's again go back to our PPT quickly. So sharing back my PPT. So here we were at the horizontal analysis and we have seen the example. Hopefully, I feel that though this concept is more or less simple, but often, as I have said, in an examination, simple concepts sometimes become difficult if you have not practiced it properly under the time pressure. So please be aware of the difference between the vertical analysis and the horizontal analysis, how the calculation. I have covered primarily what I intended to cover in this particular revision as pro session, revise as pro, as you say. And thank you for your participation. And I hope that this will be helpful for you at your final stage of revision. And please look out for further videos that we will be providing on other topics as a part of our Revise as Pro initiative. Thank you.